All right, so many things to cover today, planned and unplanned. I am going to start with what we had planned. All right. So, for those of you who do not have a broker, I am going to show you how to um, go through and set up an account with a broker. And I'm gonna get it started like this. Then I'm going to go over to Tradingview. We're going to go over those things I talked about with the chart, showing you guys the buttons, support, resistance, trends, that sort of thing. Then we're going to go into the news. We don't have a whole lot of news to cover because I did a lot of it Monday, but I am going to cover NFP since that's going to happen before we have another Zoom call, and then the unplanned, unforex plannable news that happened today. So, for those of you who don't have a broker, here we go. This is one broker that is used amongst the group. It's KOT Forex. Um, Whenever you come to this website, in order to set up an account, there's a button on the right hand side that says sign up. You will come in and click that button. Type a 1 in the chat if you guys can hear me. Okay, cool. Okay. I just wanted to make sure that everybody could hear me. Um, so on the right hand side here, there is a button for sign up. And if you want to choose KOT as your broker, because I'm going to go over 2 tonight, KOT is just being the first one. But if you want to use KOT as your broker, click sign up, and it's going to bring you to another page. And once this page loads up, you'll see the information that it's going to require of you. You're going to type in first name, last name, email address, and then a password, and then sign up. Let's see. I'm just doing another account just so I can actually show you guys, okay, what the process looks like. Okay, so once you go through and you put in that information, it's going to do an account verification, and all right, so I got the email from them. So within the email, it's going to give you a button that says complete sign up. And I'll just tell you what's on the account creation screen. So it's going to ask you for your first name, last name, that same email address, your default currency, which will be US dollar here in the US. It's going to ask you for your birthday, your gender, and then your address. And then it's going to tell you to click the button to create an account. So that's the process that you would go through in order to set up the account for KOT. I don't know if it's going to actually let me go back and um, actually do the sign up. No, so it probably won't let me. No. Okay. So you just have to go off of the email address, off of the email that you set up, because it's actually going to take you to the page whenever you sign up under your email. So that's KOT Forex. And then the next broker is Fair Forex. So I use Fair Forex. I used to use KOT, but in full disclosure, my best friend opened up a broker, and this is her brokerage that she started. So Fair Forex. A lot of the information that I tell you guys about how brokers operate is not because I think, it's because I know. Because I see what she sees. I know what she Okay, hold on for a second, you guys. I stopped talking for a second. Hold on. Okay, everybody. So I'm back. Hopefully you guys can hear me now. Okay. So what I was saying about Fair Forex was that in full disclosure and being fair, Fair Forex is a broker that my best friend started. So when I'm telling you guys information and I'm dropping sauce about brokers and how they operate and that sort of thing, it's not because I'm just telling you guys what I think. I'm telling you guys like from a place of experience. Like I know like how brokers see things because I see what she sees. So this is Fair Forex. This is her broker. I use Fair Forex. So when I'm giving you guys trades, or if I ever put a trade in the group chat, just know that it's coming from Fair Forex. If Mr. Levels drops a signal or something in the chat, it could either come from Fair Forex or KOT or another broker. There are lots of brokers out there. I picked these two because they're used most commonly. Um, wasn't sure if you guys heard me when I said that earlier. But with Fair Forex, as far as signing up for an account, is the exact same. So you'll go to sign up, and once the page comes up for you, you'll type in the same demographic information. So you'll come here, you'll type in your name, email address, passwords, and then your phone number. You'll accept the terms and conditions, and you'll create and open a live account. There is a place on the home page if you want to open a demo account and practice. You actually go to a separate area and open up a demo account. So those are the two brokers. If you want help, like once you actually get set up and actually get your account, as far as like putting the money in there or transferring your money to one account from another, whatever the case may be, Mr. Levels and I can help you with that. Or I can just do another Zoom call as people need it. But most people I know have the accounts. It will only be a few of you that will need help, if any, getting the account set up. So I can come back to this information later if you guys have any questions, or if you guys have any questions now, you can put them in the chat so that I can answer them. But I'm gonna move on to the charts and start talking about the chart information, and you can drop any questions you have in the chat. So any questions about the broker as I'm going over the chart, drop any questions in the chat so then I can answer them as I'm going along or once I finish, so that you guys can get your questions answered instead of having to wait to the end, because I want you guys, while the questions are fresh, to be able to get your answer. And then if you want to wait, that's fine too. Just however you want to do it. So as far as Trader's Way, question in the chat says, is Trader's Way recommended? I don't want to like say yes or no as far as like it being recommended. It is a broker. It's a broker I have used before. There are pros and cons to certain brokers. And a lot of the pros and cons that you'll hear people talk about are from personal experience. So I experienced with Hugo's Way and with Trader's Way, I experienced a lot of slippage. Slippage is when breaking news comes out, or just a regular news item, or just when there's like really strong volatility in the market. If you have an order that's in, and you have a stop loss in place, if the market's moving with a lot of volatility, the markets and brokers call it slippage when your price gets slipped over or skipped over. So, like let's say for instance, you have a buy-in for something at $100, and you have it in for a buy. Price is currently at 120, but you have a stop loss at 110. And let's say that breaking news comes out and causes it to drop, and price drops really fast down to like $105. Well, your stop loss will get skipped over. And if price keeps moving down, eventually, whenever the broker says that they catch up, they'll close out your trade, but you might be negative $20 instead of being positive 10. So I steered away from Trader's Way and Hugo's Way for that reason. Trader's Way, it was just regular currency trades that was happening to me with. With Hugo's Way, it was Bitcoin. So if you talk to a lot of different traders, a lot of traders will tell you different things about brokers. The ones that I'm telling you about are brokers that I know for a fact either have very little issue with slippage or have good customer service to help you deal with the issue should it happen. I've had slippage issues with KOT, but I wrote KOT, I sent them screenshots, and they gave me my money back or reopened my trades. With Trader's Way and Hugo's Way, I never experienced that. So that's just from my experience. If you ask Mr. Levels, if you ask some other people on the call, they might have a different experience about it. But that's definitely a pro that I have for KOT, is that when I had issues with slippage, they recognized that they had an issue with slippage and it was their servers, and they would either refund or reopen my trades. So as far as Trader's Way, it's not a broker that I use. That's a good question. And towards the end, if you guys look in the chat, I will put a list of different forex brokers in there, because I want everybody to be able just to know what other brokers are out there. Then you can choose on your own. But that information will be in the chat like once I finish, right when Mr. Levels is getting started, I'll put that list in there for you guys so that you can see it. Again, thank you for the question, Mr. Carl. All right, getting started with the chart. So everybody on here should be familiar with the charts when you get ready to trade. If you're doing a demo account and you're just starting out, you know, open up your chart on your demo and make sure you're familiar with your chart, whether you're using it on your phone or on your computer, and make sure that you're comfortable with what you see and how you see it. Make sure that if you have any type of color blindness, you change the colors. Make sure that if your eyes are sensitive, you make sure that your background is black, or you change it to something that makes you comfortable. Also, make sure you can see everything. So this is Tradingview. I will put the website in the chat with those brokers and some other information as the Zoom call goes along. So at the end, before the Zoom call is over, make sure you guys scroll and screenshot or take pictures of the chat, because I'll just be putting stuff in there as the call goes on. So tradingview.com, this is where whenever you're looking at Mr. Levels charts, this is where the chart comes from. It comes from TradingView. If you have a broker that is regulated in the US, I will go over that another time, but if you have a US broker, a broker that's based here in the United States, when you type in the name of whatever you want to trade up here in the top left-hand corner, it will bring up a list of charts based on the name of that broker. So with Bitcoin, it's bringing up like Bitstamp. If I typed in Euro USD, just to show you what I'm talking about, there's a lot of Euro USDs that come up. What you're going to want to do is choose the Euro USD that matches your broker. And this is only going to be if you have like FXCM, Oanda, forex.com, IDC. So these are US regulated brokers. You want to make sure that if you do have one of these, that you actually pick the broker that matches the one you signed up with, because it's going to give you the pricing that matches whatever you're going to see whenever you get ready to place your trades. That's important because every broker is going to be a little bit different by a few cents. With Traders Way, Hugo's Way, KOT, and Fair Forex, right now, if I pulled up the price for Euro USD, they would all be different. They would all be different because they're all different brokers, so they're like different banks. They operate off of different servers, and then they get fees and secure money from traders in different ways. So just make sure that you're matching it up. With Bitcoin, I didn't choose one in particular. I just chose the one that popped up. And that's what you're looking at now. The reason why you don't see anything on the screen as far as candlesticks is because I scrolled up so that I could put words on the screen for you guys to read. So what I'm going to go over first for you guys is just the layout and the buttons before I dig into anything else. So when you pull this chart up, on any chart you pull up, whether it's on your phone or on your computer, you're going to see numbers on the right side. Those numbers are going to be the price. So if Bitcoin was at $40,000 right now, you would see some candlesticks and you would see lines with the candlestick moving. You'll see that when I scroll down in a few minutes. But this is the price. This is where the price is of whatever it is that you're trading. It's always going to show up on the right-hand side, no matter what it is that you're trading. At the bottom, you're always going to see the time. How this time shows up could be a little bit different based on the time frame that you choose, and I'm going to go over that in a few minutes. On the left side here, for right now, you guys aren't going to use all of these buttons. the one that I really want you guys to pay attention to is the second one. It's called Trendline Tools. And when you click it, this horizontal line is what we're going to focus on tonight. All the other lines are of some importance for different purposes, but for what we're going to do tonight for support and resistance, we're going to be using this horizontal line. I'm going to show it to you and show you where it is. I won't actually put one on the chart, but if you wanted to put a line to mark the trend, when we go over trend lines, and I'm talking about an uptrend and a downtrend, if you actually wanted to mark that on your own chart for personal reasons, the trend line tool is what you would use, because it actually gives you a line that's slanted and not a horizontal line that will just be completely flat. So to go over the rest of the buttons, those are going to be at the very top. So I'm going to transition to this next topic of time frames. Time frames is going to be the button that you see with a number and a letter. So when you click on it in Tradingview, you're going to get a drop down. It's going to say seconds, minutes, hours, days, and you can choose your time frame. Right now I have it set for 1 hour. What that means is when I show you the candlesticks, every candlestick is going to be representative of an hour's worth of time. And then if I were to change it to 15 minutes, each candlestick would be worth 15 minutes worth of time. So one candlestick on this time frame right now is worth an hour, but whenever I change it, that one candlestick will be worth 4 candlesticks on a 15-minute time frame, because there are 4 15-minute segments in an hour. The next button that I'm going to show you and that we're going to use tonight is the one that says candles. It actually changes how your candlesticks look. I'm going to use that button once I show the candlesticks in a few minutes, but I want to show you just for right now where it is. And indicators. Indicators is where you go if you want to add things to your chart. So Mr. Levels uses the Fibonacci. Some people use moving averages and things like that. When we get to that, this is where you'll find it. So across the top, those are going to be the 3 main buttons on Tradingview. All right. So now here are the candlesticks that I've been talking about. So now we're going to go back and recap everything, but with candlesticks on the chart. So I'm looking here. This is the price. So Bitcoin with this broker, I think I'm using Bitstamp for right now. It's showing price at 37,001. It's going to fluctuate, but we'll just say 37,001. This timer that you see is telling me how much time is left before that candlestick closes and another one starts. So this candlestick right now, this red one that you see, is 32 minutes worth of information because it's 8:32 Eastern time. So if we look to the left, we see this green candlestick. That's a whole hour. That's the whole 7 o'clock hour right there. This green one is the whole 6 o'clock hour, the whole 5, the whole 4, the whole 3 o'clock hour, and so on. These are candlesticks that are worth 1 hour. So when you're looking at these candlesticks, price has moved that much in 1 hour. If I go over here and change this to 15 minutes, now this candlestick has only been open for 3 minutes. And I have 11 minutes left in this candlestick. Why? Because this candlestick is only going to show me 15 minutes worth of time. So this candlestick, and this red one are all going to start working to make up that 1 hour candlestick that I was telling you guys about. So I'm just going to put this back on an hour. It's just easier to have condensed information, but I wanted to show you the 15-minute candlesticks. You saw how they were smaller, and Mr. Levels often talks about changing time frames to get better entries. And this button to change time frames is really important to know where it is and to know what time frame to choose and to know what you're actually looking at whenever he says that. So I mentioned earlier about making the screen comfortable for you and changing the colors and things so that your eyes are comfortable, so that you account for color blindness. My candlesticks right now are green and red. They're green and red for the purposes of up and down, money, no money. Um, so the green candlesticks mean that in that time period, for that hour, that price went up. And then the red candlesticks mean that price went down. That's very important. You want to make sure that if you change the color of your candlesticks, that you remember what color you changed them to and what they mean. Um, I think green and red is actually the default for Tradingview. If you look at other people's charts, there are some people that use black and white. There are people that use, their own personalized colors. Just make sure if you're ever looking at somebody else's chart that you understand what color scheme they're using and which are their positive and which are their negative or bullish, bearish, buying or selling candlesticks. And then down here for the time, one thing that I have on my charts for Bitcoin, and it's only going to really work for me functionally on Bitcoin, are these dotted yellow lines. I have Tradingview set up to tell me when Bitcoin takes a break. Bitcoin only takes a break once a day, and it's only for 15 minutes. That's when the market closes. You get charged a swap fee for holding it overnight, and then it reopens. So technically, we just started what would be a new day for Bitcoin. All right. So I told you guys that I was going to change these candlesticks. I'm going to change these candlesticks from candlesticks to a line chart. So you would do that by clicking that button for candles and going down to line. And now instead of those green and red candlesticks, you see a line. I did that because I'm getting ready to start showing you guys support and resistance. And I'm going to zoom out on this chart just so that I can have more data. And I may actually go and put more time on the chart. So I'm going to go to 4 hours. So now I'm putting more time on the chart just so that I can give you guys a better visual of how to find different things. All right. Bitcoin is not giving me a great representation of support and resistance because Bitcoin just moves one way, or it has just been moving one way. So I'm going to go to Euro USD. And I don't need this. I might. I don't know what I had it for. Okay. I'm still going to stay on Euro USD, but I'm going to pick another broker because I have lines on that chart and I don't want to mess them up or lose them. So I'm just going to choose another broker where I didn't have a lot of stuff on the chart. Okay, so whenever I'm talking to you guys and I'm telling you guys about support and resistance, and we're talking about break and retest, it's super important to know support and resistance, how to find it, where it is, what does it look like on a chart. The easiest way I have to tell people to find that is to put it on the line chart. It's super simple. It's really easy. It doesn't matter whenever you're first starting out to just visualize it, to put it on any time frame. You're going to find support and resistance on every time frame. It's important for you to know how to visualize it. So how? I always tell people to go through and mark the mountaintops and the valley bottoms. So what do I mean by that? Here, these are like valley bottoms. So you find your M's, you find your V's, you find your W's, and you mark the bottoms and the tops of those. So I'm marking this area here, and I'm going to explain a really important concept in a second. And I'm just going to mark some mountaintops, some peaks. So the more times that a line touches where you've marked, the better and the stronger that line is, that level is, as Mr. Levels would call them. So if you look at this line that I put down here, this line touches 1, 2, 3 times. We want at least 2 touches. And then here we have this line being touched 1, almost 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, almost 12, 13, 14, 15, 16, 17 times. So the market played around at 1.1894 a lot for Euro USD. And then it broke this level, came down and retested it, and then shot to the moon. So when Mr. Levels is talking about break and retest, it's usually off of a level. Think of support as being the floor or a chair that you're sitting in. That chair is supporting you. The floor is supporting you. Think about resistance as being the ceiling. So whenever you're sitting down, you're in the chair, you're comfortably supported, you're not falling through. You're not breaking through that chair. You know, you're good, you're comfortable. Here with the resistance, think about it as a ceiling. So you climb up and you meet resistance, and you have to come back down, meet some resistance, meet some resistance. There are those areas where you are going to sometimes find price that is going to break through. These are important because when Mr. Levels is telling us about breaking and retesting, confirming that price is doing a particular thing, whenever you're looking at your level, make sure that price is not closing below a resistance if it's broken through for the retest. And then down here, you just want to make sure that if you're expecting price to break below and continue to sell, that it's not closing above this line. So I'm going to show you that here. So if Mr. Level said down here that he was expecting price to come up to this price level and react to it. Okay, price comes up, price is reacting here at this price because it's having a hard time breaking above it and sells off. And he says if price comes back up and touches this area again and breaks and closes above it and then comes back down on top of it and can't break back below it, then buy. That's what that looks like. That's what that whole setup would look like. That area right there is like a textbook break and retest. But I didn't even realize the break and test was just really right there. It happens whenever you've had a strong resistance level that gets broken. And when price is then on top of that level, comes back down and can't close below it, and then keeps moving up. So does anybody have any questions about that part? Okay. Cool. So I see people saying no questions, but if you do have one, you can drop it in. I'm going to move on to trends. So when we talk about the market having a trend, I want you guys to think about stairs. Either the stairs you walk into to get into your house, to get to work, when you're working out, whatever pair of stairs you want to visualize for this, do so now. When we are in an uptrend looks like stairs. It looks like stairs going up. This is a really good example of an uptrend right here, because literally you have price coming up, and then you have price turning around, coming back down. And then when price comes down, it moves up. But the thing with an uptrend is that your highs are always going to be higher and your lows are always going to be higher. So the key thing about an uptrend is to remember that you're making higher highs and higher lows. That's how you're getting up the stairs. That's how you're moving up. Okay. So that's your uptrend. It's not going to always perfectly look like stairs, but the visualization is very similar for stairs. You're making higher highs and higher lows as you're moving in an uptrend. And for a downtrend, it is the complete opposite. And you're making lower highs and lower lows. So here's a great example of a downtrend. You're making, so here's your high. Your next high is lower than the one prior. Here's your low. Here's a low. But then here, price came back up and formed a high, but this high is lower than the high here. Price comes down, forms a new low. This low is lower than this low. Price comes back up a little bit, but then falls sharply. This low is lower than this low. And you get another true high that's formed, and it's lower. So it's a slanted line. So remember earlier when I was telling you guys that you could put a line on your chart for a trend, and I was just going to show it to you, but I'm going to put it on the chart so you guys can see. So it forms a line that's slanted down. So if you ever wonder if you're in a downtrend or not, put the lines on the chart and you'll see. Same rules apply that apply to the horizontal lines for your support and resistance. You definitely want to make sure that you have at least 2 touches. 3 is great. And then here you see that we definitely got that number of touches for this downtrend. If you have 1 touch, it doesn't count as anything. It's just a point that you're waiting for a second point to help you get data from. So that's why you need 2. You need a point A and a point B. So with this downtrend here, lower highs, lower lows, then for your uptrend, higher highs, higher lows. So when we're talking about the trend being your friend, knowing when a trend is ending, when we're just talking about trends, period, it's definitely good to know, you should know how to verify a trend, which is the higher highs and higher lows. Then you also want to make sure that you know how to identify when a trend could possibly end, and consolidation, which is when price is moving sideways. That's one way that the markets could possibly tell you that a trend is getting ready to end. So this area here is not really clear. It wouldn't necessarily be clear for a new trader, but for those who trade, actually, I'm gonna use this area down here because it's definitely clear. So this, on this area of the chart, you see how price just moves between these 2 price levels? It just keeps bouncing back and forth. That's consolidation. It's also called ranging. So when price just bounces between 2 price levels, it's not really going anywhere. That's ranging. You don't trade, you don't want to trade in those areas. You can, but it's definitely not recommended because you're not getting the full volatility of the market whenever you do so. You are likely to see a strong break and retest happen whenever markets are breaking out of consolidation and out of strong areas of ranging. So as you can see here, price finally broke above this area, this resistance here. Price finally broke above it and came down and retested it perfectly. So right there, price finally broke through, came down and retested it, and then price bought strongly off of that level. How do I know strongly? Because on a line chart, the stronger the move up and down, or the more vertical a line is, the more impulsive, the more strong, the more bold a move may be. Those are words that you'll hear different traders using to talk about really large candlesticks. So break and retest is definitely important. That's why it's really important to know what a support and resistance is, because a support and resistance is going to give you your basis for where to look for a break and retest. And I could put lines on a chart, on any chart, and they are valid. So when you hear Mr. Levels talking about having lines on his chart from last year, it's because levels are always valid. So I'm going to zoom out because I'm on the 4-hour chart right now. This one line right here was valid for almost a whole year because of how many times price touched it. And even this line here, so I'm going to use this line as an example. I'm going to change the color to this fuchsia purple color. So this line was used as a really strong support for about 3 months or so, 3 or 4 months here. Then price shifted and it became a really strong resistance. So price had a really hard time breaking above and staying above this price. And then it became a support again about a year later. So these lines, when we talk about support and resistance, Mr. Levels calls them levels because sometimes they might be a support and sometimes they might be a resistance. A line just always functions as a level of information, of a level of where the market has really strong activity. So speaking of really strong activity and going back to the comment I made about brokers, whenever we're trading and whenever you hear Mr. Levels talk about maybe like an institutional level or a level where there's a lot of activity or levels of liquidity, that matters because these areas of support and resistance, especially the ones that stay really strong for a, a long amount of time. I say a long amount of time. I mean, it could be months, it could be years, but definitely longer than a day or two. When those levels stay valid, brokers notice it, institutions notice it, banks notice it. Banks are really the ones who are making that level of some importance. That could be a level where if price crosses it, it could mean the difference between the US having to pay more for a shipment or another country having to pay more for a shipment. That's why the news is important. So I'm trying to help you tie together all these concepts. The main one that we look at that concept in is when we start looking at the US currency versus the Chinese currency and the US currency versus the Japanese currency, because they hold a lot of our treasuries that we use to offset debt. Anyway, um, levels are important. They're important because they shift economies, they shift how we pay for stuff. Institutions and brokers see this. So your broker isn't necessarily looking at your account, but they see groups of activity around certain levels. So let's say, and I'm going to help try to put this into like a bigger perspective for you guys. So let's say you're in a trading group that has 100,000 people in it. It's a big trading group. 100,000 people, and let's say that someone who calls out signals sends out a signal and says buy at this level and put your take profit here and your stop loss here. Everybody in the group is, let's just say everybody in the group put their stop loss and their take profit where that person said, and they all went and jumped into the market. The broker is going to see that as a large group of activity at a price level. So those are things that get seen on the chart. I've seen a lot of you talk about, oh, I put in this trade and I put it in at this particular level and it seemed like price came down and hit my level, closed me out of my trade and went in the direction I thought about. Well, that's because groups of activity, huge groups of activity get put into charts and institutions see it. But one thing that I can say that's great and different about Mr. Levels is the way that he teaches you to get in and out of the market. It's not the traditional baby pips way of teaching forex. So you're not going to be in at that price level that everybody else is in. You're going to get a spot on entry. you're going to get a spot on exit. If you've gotten into any trade since Monday, you would know that for a fact. You would have proof. You can say, yep, I know because that happened to me. So if you haven't gotten into any trades, he's going to show you tonight how the trades have set up since Monday, and he'll be able to show you and tell you, like, you know, it's not the baby pips way. Lots of traders get taught support and resistance and trade support and resistance, and that's it. There's nothing wrong with that, but just know that more times than not, if you only and solely trade with support and resistance, then your trades aren't going to be as profitable as someone who's using you know, a different method, a more precise method of getting into the market. So does anybody have questions about support and resistance, how to find it, or trends? I'm going to put some pictures in the group chat for you guys because um, not everybody is going to go back and watch this, although you should. And then it's nice whenever you're looking at your chart to not have to go and find a video and rewind it or fast forward it. You can just have a picture. So I'll put a picture in the group for you guys. But does anybody have any questions? I'm gonna switch my screen, so I'm gonna give you guys like a minute to put whether you do or don't into the chart or into the chat. I'm sorry. Okay, cool. So I'm going to go ahead and share my screen now, and I'm going to talk about non-farm payroll. So I told you guys we were going to talk about non-farm payroll tonight because it's definitely one of those things that everybody needs to be aware of. It happens on the first Friday of every month. I'm going to highlight the really important parts of this because this one's from last month, and it covered November's news. So any payrolls report that comes out is going to be covering the month before. So the one that we get on Friday is going to cover December. We haven't gotten through the whole month of January to have a January report yet. So just remember that whenever you're looking at these reports. So it's always going to have the Bureau of Labor Statistics information at the top. You could always write them or call them and ask them questions. I've heard that they're responsive. I had never tried. And then it starts with the employment information. So that same information that you'll see on Forex Factory that shows up like right here, it's going to be on that very first page. So it tells us that jobs rose. The amount of employment rose in November, and that the unemployment rate actually dropped to 6.7%. They will then follow that up with some graphs and charts to show us what employment situation was like over the last 12 months or so. So this is where we were November of 2018. And then COVID hit, and we had a super sharp rise in unemployment. And this is the actual unemployment rate itself. So this is percent. So this is about 15.8%, I think, maybe 15.5%. And then now it's showing that unemployment rates are slowly but surely starting to fall, or the percentage of unemployment is starting to fall. This next chart is actually showing us the number of jobs in thousands. So whenever you read this isn't 5,000, this is 5 million. And it's showing us job growth or shrinkage. We definitely lost a lot of jobs the beginning of 2020, but we're starting to recover. We just have to recover all of those jobs that we lost during that period of time. So moving on, it's going to tell you household data. It's going to tell you how to actually read this report. It's going to summarize a lot of things for you. So it tells us again that unemployment rate edged down to 6.7%. And then it's telling us that it was down from the high of April, which was 14.7%. So it was down from the highs of 2020, but then it's still a little bit higher than what it was in February, because in February of 2020, the rate was about 3.5%. It tells us how many people unemployed. It starts to tell us the job groups. So among major workers, the unemployment rate for women was 6.1%, and it declined. So jobless rates for adult men, teenagers, whites, blacks, Asians, Hispanic, it showed little change. It goes through temporary layoff, long-term employment, participation in the actual workforce itself. This is one important thing to note. It also talks about part-time employment. Whenever we're looking at the actual job number itself, and they're telling us about how many jobs have been created in the market, I want you guys to know and understand that now, because they didn't before, now they actually are including seasonal jobs, part-time jobs, and teleworking jobs. So those jobs weren't necessarily counted before, and they weren't counted in the unemployment rate itself, just because those tend to be temporary jobs. People come into those jobs and like rotate out of those jobs a lot. They were looking to really count people who were full-time and got full-time benefits, but now they are including everybody. So that's a major shift that has happened in how they've counted the job numbers over the past few months. It goes through teleworking jobs. So in November, 21.8% of the employed people were teleworking because of the coronavirus pandemic. And then 14.8 million people reported that they had been unable to work because their employer closed or lost business due to the pandemic. So that's 14.8 million people who aren't working and who are filing claims or trying to file claims, because not all of them are able to do so. And then you have about 13.9 million, or 3.9 million people not in the workforce in November, and they were prevented from looking for work due to the pandemic. And then this is up slightly from October. So it's going to tell you all of that. It sums it up. It talks about what industries brought in jobs, like transport and warehousing. Those jobs rose. So how do you use this to your benefit whenever you're looking for things to trade? If you are a stock trader, you can use this a little bit more to your benefit than a forex trader, only because it gives you different industries, and you can actually go through and pick stocks based on the industry. So in employment, jobs in transportation and warehousing actually rose in November and still has room to grow from February target that they're trying to get back to. Professional and business services rose by 60,000. Healthcare jobs rose by 46,000. Construction jobs rose by 27,000 jobs. And those are all areas that still have room to grow. Manufacturing increased, finance increased. So when you're trying to find stocks to buy and you're trying to think about areas where the market's growing but hasn't gotten back to pre-pandemic levels, page 3 or about page 3, at least it's page 3 on this report, will tell you what areas to go and look at. So my favorite part of the report starts after that. Is where you can actually go through and look at the different job sectors. I'm not going to go through all of the job sectors and read it all, but you can see for civilian jobs, it will tell you, who was employed. It'll tell you the age. It'll tell you whether Black, white, Asian, Hispanic, education. It will tell you the reason for why a person left employment, reason for unemployment. It will tell you the duration of unemployment, um, part-time work, reasons for, or people that might not be in the labor force. And it goes through each industry and sector. So it starts going through showing you private versus government, so it gives you very valuable information. It also tells you the average hourly earnings and hours that a person got. So a typical work week is about 40 hours. But as you can see, the end of 2019 up until now, that the average hourly earnings have been about stable, or the weekly hours have been about stable. So if you're looking at the jobs report, jobs, the actual number of people employed fell, but the average weekly hours stayed about the same. That means that they either brought seasonal workers in that don't get accounted for in one of the job areas I'm going to show you in a second, or it means that people who are part-time are getting more hours. People who are full-time have been bumped down. So it shows you that businesses are still able to maintain the balance of work hours, even with having to cut jobs, that they're making a shift somehow. This could also mean that people who are on the payroll as salaried were working more hours, and they are not counted as hourly workers because they're salaried. So those extra hours that they may have put in don't get accounted for in that section. Um, a lot of frequently asked questions get answered right after that first graph, but then there's like way more. It actually starts writing paragraphs about all of this data. It will sum it up for you, but I definitely like to go through it. I like to go through and actually look at African American and Black employment and the workforce, really read through these numbers and see, because when they say that, um, Black people have lost jobs or gained jobs, this report's going to tell me yes, they did, or no, they didn't. So that's that. I'm not going to bore you with the whole report. I just wanted to show you that what was there, but that's really the big news that we're looking forward to. We do have services numbers that are coming out tomorrow and unemployment, but Friday's employment number is really what we're going to be looking at and paying attention to. According to the preliminary or the independent job number that comes out on the Wednesday before, we actually were down. We actually lost 123,000 jobs when they were hoping that we gained 60,000. So if it's consistent or relatively similar to what we're seeing in the job numbers today, then we can expect that um, there will be a loss of some jobs here. The unemployment rate, as everyone should hope, we hope that the unemployment rate continues to drop, and we hope that hourly earnings go up or stay consistent. That's really important for people who are going to be in any USD trades. If you're going to be in US 30, gold, and Bitcoin on Friday, because US 30 is going to be the very first thing to react to this news. It's going to come out right when the market opens. So Average hourly earnings, the market pays attention to it, but you definitely don't want it to be a number where it's showing that people are getting paid way less money. So if this number is negative, it's not going to be good. Like negative 0.01 or 0.02%. It needs to be either 0, 0.1, 0.2 or better. The employment change number, they're already feeling that it's going to be consistent with the independent number that came out today. And if it is consistent, then we're already expecting this number to be down. And then the unemployment rate, we want the unemployment rate to be 6.5 and above. We definitely, or below, sorry, hold on, let me go back. We want the unemployment rate to be 6.9 and below, because if the unemployment rate is above 7 or 7 and above, we're starting to go backwards, and that's not a good thing. But one thing I do want to say is that if this number is negative and people had to go back into the unemployment system and start filing for claims again, then this number will be up. How will we know? Well, or how can we make an educated guess? Tomorrow, when unemployment claims come out, we want to look at this unemployment claims number, and we want it to be less than this number here. We don't want more than 798,000 people filing for unemployment claims. We want less. That means that less people are going into that system. So if this number is greater than what's forecasted, then I'm already going to be thinking in my head that this number for the unemployment rate could be more than 6.8, that it could probably be rising back towards the sevens again, especially if whenever this comes out, this is negative, but it's all coming out at the same time. It's just to kind of help you put together a picture for how they're going to analyze this in the news. How are you going to use this to your advantage? Now, somewhat transitioning to general news after what happened earlier today in Washington. I'm not expecting the markets to react positively to that, because you're talking about something that's happened within our government structure that's caused other countries to look at us in a very weird way. It showed a strong vulnerability to our government structure and our government system. Even though they're back in the Senate House now, it still temporarily showed that we're vulnerable, and it was our own citizens that did it. The market doesn't like that. Also, the Democratic candidates won in Georgia, and they're validating that now. But corporations don't like a blue wave, the sweep of blue. They don't like a lot of the policies that Biden has proposed putting in place. So the markets aren't going to react super strongly off of that. And geez, a lot. And so particularly for tomorrow, when unemployment claims come out, this number needs to be good to help balance this news. But I'm also anticipating that as this news kind of unfolds from today and we go through the rest of the week, that the markets are definitely going to be responding to all of this. How are you going to really be able to benefit from the news that happens, these forex factory news items and stuff? Do what I do. First and foremost, pay attention to the news, and secondly, pay attention to Mr. Levels when it comes to technicals. um I have a strong technical background. I love looking at my charts, but I definitely like seeing what he sees, because one thing we both will always tell you is that strong fundamentals is going to be backed up by strong technicals, and strong technicals are going to be backed up by strong fundamentals. What do I mean? There are levels that Mr. Levels can put on his chart right now, And I will tell you news, and news drives price to hit particular levels on the chart. So like with US 30, when all of this news and stuff came out about, the Capitol and all of that earlier today, I'm pretty sure U30 came down and hit a level on Mr. Level's chart that he already had marked up for it to hit potentially. News drives technicals. Technicals drive news. Like they go hand in hand. You can't have one and be really good without the other one. So pay attention to these things. Definitely, if you don't have an app on your phone, I told you guys I was going to give you some apps. If you don't have apps on your phone, you should have, bring out my handy dandy list. You should at least have Bloomberg or investing.com on your phone. I also use my FX book, but have something on your phone that is going to give you notifications about news alerts, things that are happening in the news. I've told you guys before, like if you don't already, it won't mean anything in the next 12 hours because he can't tweet for 12 hours, but follow Trump. Or follow whoever the president is. Let me put it like that. Follow whoever the president is on social media, because there are news items that they can put out and will put it out without giving it to a news outlet. And that news will immediately move the market. So it doesn't matter who it is, just make sure that you keep up with them. You don't have to necessarily actually follow them, but make sure you keep up with what they're posting, with what they're saying on social media. So that could be Twitter. Most of them use Twitter. So Twitter. Um, all right. Another set of brokers that I feel like you guys need to have, or apps that I think you guys need to have if you don't already. Some of these are in the group, so I'm just going to kind of like run through them really fast and not explain them. Robinhood for stocks. I'll explain this one a little bit because it's super important. Robinhood allows you to purchase fractional shares, which means you don't have to purchase a whole share at one time. So for instance, Amazon is like a little over $3,000. If you don't have $3,000 to buy one share, you can put in $50 and it will let you buy a piece of a share. Robinhood is good for that, buying crypto, and then also placing options. If you're advanced in stock trading, you can do options trading on Robinhood. Coinbase is where you're going to be able to buy cryptocurrency, as well as Kraken and Trust. Mr. Levels put information about Kraken and Trust in the group. If you have a iPhone, download My Dividends. If you're a stock trader, it will help you to keep up with the dividends you're going to get for your stock, when, how much, and it'll help you keep up throughout the year with your dividends. If you have an Android, there's an app that's fairly similar to it. It's called Dividend Dashboard. So download those. And then the chart that I was showing you guys at the beginning from Tradingview. Tradingview actually has an app, so you can download the Tradingview app, make an account, and whenever you do a chart on your computer, it'll sync and you can carry that same chart around with you on your phone. I find that that is really handy, especially if you like to do really detailed chart markups. You don't feel like you have to carry your computer around with you everywhere that you go. I'll give you guys more um, apps later. That's like a little list to get you started. You don't have to download all of those, but pick the one that works best for you, especially of those news apps, and download it. So before I go, someone wanted me to explain U30. So whenever we're trading, I will show you visually actually. CNBC is another website I just kind of frequent in addition to Forex Factory and Daily FX, just to kind of keep up with financial news. All right, here we go. So whenever I talk about U30, US 30 is um it's a way to trade the Dow. So you're ever watching TV and you hear them talk about the Dow Jones Industrial Average in the stock market, that's US 30. So it consists of 30 US companies and they all get put together into an index. And you're able to actually trade that whole group of 30 whenever you trade US 30. Um, there's SPX 500, which will be the S&P 500. S&P stands for Standard and Poor's. It's a group of about 500 stocks that's put together into an index. SPX 500 allows you to trade that whole group of 500 all at one time. And then there's the NASDAQ. So NAS 100 will be the NASDAQ, and that's a lot of your pharmaceutical stocks and a lot of your tech stocks like Facebook and Twitter, Snap, Pfizer. A lot of those stocks are all grouped together in NAS or in the NASDAQ. And then NAS 100 in Forex is how you can actually trade the whole group. If you are a stock trader, the only way you can trade groups of stocks like that is with a mutual fund or an ETF, things where they actually put them together into an index. Like it has to be an index for you to trade it outright like you can in Forex. So Forex gives you an advantage because you can actually trade the whole group of stocks or the whole index by itself. Here on CNBC, you can see the future price of those indices here. But I wanted to bring you to CNBC so I could actually just show you what US 30 is itself as opposed to showing you on the Forex chart. So when you're hearing them talk about the markets are up, the markets are down, they're talking about those indices. They're primarily talking about the Dow Jones, which would be US 30 when they're talking about the market being up or down. They typically talk about the other two if they're talking about small businesses for like the S&P 500. And then if they're talking about pharmaceuticals or technology stocks, they're typically talking about NASDAQ. So keep that in mind, especially if you own those or if it's something that you're really, really interested in. Those are how to kind of differentiate those three. They all typically move in the same direction. So if one is up, typically the other two are going to be up. It's not always like that. Make sure you look at the chart, but typically they all move in the same direction. So I hope that I was able to answer your question with that. So if anybody has any questions, you can put them in the group chat here on Zoom. Put them in the Zoom chat. I'll answer them. Go ahead and let Mr. Levels get started. And I'll answer your questions throughout. And I will also put those things in the chart that I was telling you guys about. So be on the lookout in the group chat so that you can see all of those things, and make sure you screenshot the group chat before we actually end the Zoom call. So I'm gonna go ahead and turn it over to Mr. Levels so that he can get started.
Cool beans. Appreciate that, Corman. A lot of great information packed in there. I definitely took a lot of notes myself. Note takers are money makers always. And once again, great job. Appreciate you. So we're gonna jump into technicals. Cool beans. So going back to Monday night, I told you guys that we are still bearish. I'm still bearish on the dollar index. Told you guys that I wanted to see the dollar come down and test this 0.89 cent level that I have marked right here. As you can see, the dollar is it almost came and retested it, not quite. It's like a pip off, but we're steady making our way down to retest that level. Like I told you guys Monday night, I do want to see the dollar get up in this zone right here, these levels, and potentially break through those levels and continue to the downside. Especially with everything that's going on right now, I definitely see the dollar continuing to sparrow to the downside. So, with that being said, let's look at our currency setups that we had for Monday night. Here we go. Looking back at Monday night, I'll take you back to the daily because that's how we was looking at it Monday. So I told you guys that I wanted, of course, you know that our currency pairs move in the opposite direction of the dollar. So anytime we're expecting the dollar to go one direction, we'll always be expecting the currency pairs that we trade to go in the opposite direction. And those currency pairs are EU, Euro USD, GU, GBP USD, and NU, NZD USD. So we already know that those pairs move in the opposite direction of the dollar. So we know if I'm saying that we are bearish to start the week out with the dollar, then we automatically know we're going to be opposite of that on our currency pairs. So y'all know that we opposite, we were bullish for Euro USD Monday. However, I did tell you guys that I wanted to see a reaction off of this level. I would have liked to see price give us an opportunity for a sale right there to come back down and retest this structure over here, this price structure that we have. But price decided to keep pushing to the upside, which is cool beans. I told you guys in case that did happen, we would wait for price to break above these price levels, retest, and keep pushing to the upside. And if I go down to a smaller time frame, like the hour per se, we can see how that played out. We can actually see it playing out quite well. Price did break above that structure, and it did give us a retest here, which was a good clean retest, and bought to the upside. And that was a 70 pip move. Um, we just had another retest at what time? 11 o'clock this morning. My bad. My time off. My timing off. Yeah, 11 o'clock this morning we had another retest. So had you review Monday night's video, um, you could have entered either one of these buys and you would have been good money. Good money. Of course, you know, when you enter a buy, you know you put your stop loss, your security mechanism to keep you from losing too much money in case the market go against you. You know, you always put that below the previous low, which would be here. That's the previous low. Because remember what Corman went over when she was demonstrating the higher highs and higher lows. We have that here. We see matter of fact, just let me do, yeah. So this is a mini pullback, but it's still a pullback. So and so forth and so forth. Um, so we see the higher highs being made and the higher lows being made because we have a higher high here, higher low, because this high is higher than this high. This low is higher than this low. This is okay, long as this low is still higher than this low. You might see that sometimes, but this low is still higher than this low. So we see the market trending up. We see the market trending up, and then we get another high, which is higher than this high, and another low, which is higher than this low. So we see our confirmation that we have broken the structure in a continued uptrend. The market is making higher highs and higher lows. Mr. Levels has already given you the structure, the levels, the support and the resistance, the levels to play off of. Only thing you got to do is execute. So that's why it's so important to go back and review these videos, because your setups and your trades are literally in the video in real time. And so we see this buy was good money, 70 pips, 2 times, 140. Let's keep it moving. Moving on to GBP USD. I still got the markup here for you from Monday night, and you can go back and review Monday night's video and see that this was the markup. This is how it looked on the daily, because that's how we viewed it Monday. I told you I wanted to see GBP USD pull back up into this structure and give us a sell off. And so if I go come down to the hour time frame, we can see how that's playing out. Just this sell right here is currently 39 pips in profit. Could have sold off that level as well. It's like 100 something pips right there. So good money. Moving on to NZD USD. So we did get a miniature pullback off the structure. However, price did break structure, and we didn't even get a, well, we on an hour, but if I go down to the 5 minute, you will see the retest. So you might can see it on the 15 minute. Let me see. So you can kind of see it right here, retest. I'll go down to the 5 minute, and you can see the retest. right here. Broke up above it, came back and retested and took off. And so everything is good because overall we did want to see NZD, USD go to the upside, buy to the upside, GBP USD buy to the upside, Euro USD buy to the upside. Why? Because we know that we're selling the dollar, we're bearish the dollar, so we're long, we're bullish our currency pairs. So when you know these things and you know them fundamentally and you can get on the chart and mark it up technically, you can make a lot of money in these markets. Moving on to what would be next? Silver. Same markup from Monday night. You can see we got the break in the retest. Golden opportunities to make money off of silver. Golden opportunities. Um, silver is very volatile. Very volatile. So this move right here, it may sound crazy, but it's like 11,000 pips. That move off the levels like 4,000 pips. So yeah, I seen price come down, fill in this imbalance right here. I expect to see silver keep pushing to the upside. Let's look at gold. Same thing with gold. I told you guys that I expected gold to um, give us a sell off of this structure, and then I told you guys that gold be acting a little finicky, but if you see my levels that I got marked up, I did want to see gold. You remember when we talked about the gap getting filled in? I did want to see gold come down and fill in that gap. So, um, me and me and um, me and Gold been going through some domestic um issues. I ain't really been trading gold like that, but as you can see, when I mark her up, when I mark the chart up, she still busted wide open for me. So, um, good money, man. I expect to see gold keep buying up, come back up and retest these highs and keep pushing to the upside. Um, let's look at Bitcoin, of course. Y'all already know what time it is. What we doing with Bitcoin? Buying the dip, baby. You already know. So, if you bought this dip right here, you're already up 6,800 points. Just off of this dip from Monday. I told you guys, buy the dip. Buy the dip, yo. Buy the dip. Yeah, man. It's a beautiful thing. Buy the dip. Last but not least, U30. My baby girl. I told you guys Monday that I wanted to see U30 sell off of this structure. I did get some good sales. But I did tell you guys that I wanted to see U30 because this is where we was at Monday night on the call. Price was right here. Price was right here. Let me pull out my replay tool so we can go. So this is 8:30 Monday night. This is where price was at. I told you guys that I wanted to see price come up and give us a sell off of this structure. I told you guys with all the things that's going on in the news right now, fundamentally, U30 could just go ahead and sell off. But however, I told you guys that I do whenever U30 has a big sell off, aggressive sell off like that right there, 9 times out of 10 it's gonna come back up and retest the previous day's open. I told you that. I told you guys that Monday night on the call. Go back and review the call. So I told you guys that I did expect for U30 to come up here and retest um, Monday's open and Monday's New York open and Monday's London session open. But however, I told you that I did expect to see a reaction off of this structure. So we wanted to sell here and then look for the swing low and then look for U30 to continue to push to the upside. So if I play my replay mode, we can see just how that played out. That blue line is London open. Pay attention. That green line is New York open. Pay attention. My alerts is going off because I've already set my alerts because I want to be alerted when price get in that area. So I'm selling. Soon as my alerts went off and I seen that price was in my zone, I'm selling. Boom. Them a whole lot of pips for you 30. A whole lot of pips. So we've gotten our sale. Now, what did I say after we got our sale? Got another opportunity for a sale, as a matter of fact. And then I said I wanted to see price do what? Come back up here and test New York open, London open. Pay attention. Pay attention. That ain't nothing but money, y'all. That ain't nothing but money. Um, so now with everything that's going on, um, it's crazy, man. I don't see how U30 is just is steady pumping up. I don't think we'll get back above this level. Um, 31,025. This top level that I got marked up here. That's 31,025. As long as I don't see the price, as long as I don't see price close above that level, I'm going to be looking for selling opportunity to come back down and give me the retest of this zone, not that zone. Where my other zone at? There we go. That I've been looking for since November the 8th. So I'm still looking for this imbalance to be filled in. So we're going to see how that play out. Um, Patience is a virtue. We don't predict the market. We roll with the market. You already know how it go. Once it's blue, it's on you. Money in the pocket is always better than money on the table. So, with that being said, man, I told y'all I'm looking to sell you 30 as long as she don't break back above 31,025. So, with that being said, I'm gonna go ahead and end this call and take any questions.